Good morning and welcome to this webinar where we will show you how to maximize your transactions with Forbury. My name is Tim Dolan. I'm the VP of Sales at Altus Group for Northern Europe, and I'm joined by my esteemed colleague Ryan Spear. Ryan, would you like to introduce yourself?
Sure thing. I'm Ryan Spear. I lead up the product for the UK and Europe for Forbury and the product that you'll be seeing today.
So pleased to see so many people joining us today. I'm going to provide a bit of an overview of what you're going to see, and then Ryan will do all the hard work of the demonstration of Forbury. Before we get started, a bit of housekeeping to ensure we have a smooth webinar. Please note that the webinar is pre-recorded, and you'll notice on the right-hand side of your screen you have a chat box where you can ask questions. We'll do our best to get back via the chat box as soon as possible, and if we cannot answer the question throughout the session, we'll email you back the answer within 24 hours. Throughout the webinar, you'll also see that we are opening up some poll questions, which we'd love for you all to take part in and let us know your thoughts and answers. So moving swiftly on. Some of you may know that our Altus Group acquired Forbury in December 2023. It's coming up to the year anniversary, so we wanted to show you how the solution has evolved and integrating into the Argus ecosystem. For those not familiar with Forbury, it was developed to simplify the underwriting process by automating time-consuming tasks such as importing lease information and entering repetitive assumptions. It's an ideal solution for those who are looking to create standardization in their process, ensure the integrity of calculations, and reduce the wasted hours working in Excel. Now, the solution is delivered in Excel, so it's a familiar look and feel, but it's powered by the cloud for calculations. I'm sure many people on this call have creaking Excel models, which one day will finally give up the ghost. Well, Forbury is a viable alternative for those models. I remember we once did an audit on a client's acquisition model. I think it had 17 tabs and 160,000 formula. I mean, it took forever to open. There was only a couple of people in the business who knew how it worked, and it really did pose a significant barrier to that client as they wanted to scale their business. So during this webinar, you'll be able to hear how Forbury can be used to automatically populate tenancy data from PDF, Excel, or an Argus Enterprise file, how you can quickly create the cash flows and calculate the IRR, and then customizing the reports to fit your unique needs. And then obviously run some scenario comparisons of your assets for acquisitions and disposals. So with this in mind, I'd like to open up our first poll question, which is, how do you assess the current transaction market? As I mentioned, it's been nearly a year since the acquisition of the Forbury team, and the team are running hard at the enhancements. Currently, the model supports assets, commercial assets, office, industrial, retail, mixed use, etc. So just quickly on our second poll, now which asset classes are you planning to focus on in the future? So here you can see what's currently new in Forbury. So one of the key enhancements that the team has included is the ability to import and export the Argus file, so the AVUX file. This means tenancy data is moved easily from one solution to the other. This interoperability will be further enhanced next year to include cost data. The solution has also been enhanced to support European lease structures, currencies, and indexation. We had our first clients on the continent embracing the solution earlier this year. The portfolio roll-up capabilities were also released. So this allows users to dynamically combine their single asset models, providing an aggregate view of their portfolio, including any financing. Customers are now using this to model portfolio scenarios, along with understanding the impact of acquisition and disposal scenarios on their portfolio. Next year, we'll be releasing a residential model to support the many clients asking us for standardization in the UK. And there will be plans to enhance this with student housing and retirement living. Let's move to another poll question. So, what are you currently using to model your real estate transactions? Yeah. So another which has been enhanced will be the area to roll forward your forecast and import actuals. So this will allow clients to do a more comprehensive business planning. And then finally, the one key area will be the integration of Forbury into the Argus Intelligence platform. This is where we're combining all of our capabilities into a comprehensive unified data platform. Argus Intelligence is available now in the UK, and it will be available in Europe in Q2 next year. Watch out for future webinars on Argus Intelligence as they will be launched, and we'll be able to email you with further details. So let's move on to another poll. What are the challenges that you are facing in transaction modeling? Okay, so without further ado, I'm going to hand over now to Ryan, who will be running the demonstration.
Nice. Cheers, Tim. Good intro there. What I'm sharing with you now is the Forbury portal. So we'll start off in the portal. This is the place customers come to download their models. You'll see I've got 3 products here. I've got my single asset model, use for transactions, my portfolio for transactions, and our early release of that residential model that Tim was talking about. Below, we've got the portfolio roll-up that Tim also spoke about. There's a few other tabs along here, ways to store your properties, move them over into new versions of the model, categorize them by acquisitions or owned assets, and a few other features down here. But we will jump right into the modeling. So step 1, every time you come to model a new asset, just come and download a new version of the model. So you can give it an address. I'll skip that for now. I can give it a status, asset class, and a house view, which we'll touch on a little bit later. But for now, I'll just click download. And what that will do is start just a regular Excel workbook downloading. You'll see it pops up here. I've got one open already, so we'll jump over to that. So once we open up that model, this is what we're presented with. We are presented with just a regular Excel file. So everything you're used to using, you can do. You can save as, you can use all your tabs you're used to using. But there are 2 key differences in this workbook. One is that all the outputs are protected. So you can be sure that yourself, one of your teammates haven't gone in and just accidentally overridden the IRR to give it a nice 20%. And the second is the Forbury add-in on the right-hand side here. So this is what transforms this from a regular Excel workbook into a Forbury model and really adds a bit of power to it. So to get started here, I'm looking at a transaction. I've been sent maybe a PDF or an Excel workbook from a broker, from someone I know, and I want to get it into this model and underwriting as soon as possible. So this model is completely blank. I've got a blank tenancy schedule. And so what our customers will do, we'll use the add-in over here and we'll select the import tenancy option. So like Tim mentioned, we can now import from an Argus Enterprise file. That will go and import all of your contractual tenancy information, your tenant names, lease dates, reviews, rent freeze, all of that good stuff, but will not at this stage bring in your future assumptions. The second option can be to import from a PDF or an Excel workbook as well. So for example, I've got a PDF brochure here. This is going to open to the tenancy page. You'll see it's on page 39. So this is quite a big brochure here. So I can simply go and select from this pop-up box. I can go and select that brochure and open it. What we're going to do then is we're going to grab that entire PDF We're going to then scan through it, try find a tenancy schedule in there somewhere, and we're going to populate that information in this modal right here. Once it is done, there is a very simple way to make sure what we've collected aligns to the model correctly. So here you'll see the imported name and all the titles that come with it from that PDF. Now it's a simple exercise of making sure that the Forbury name aligns to the name that you're trying to import. So in this case, it's lined them all up perfectly, base rent, break dates, expiry dates, and you can simply import that. Alternatively, we can go and select that Excel model. I'll pick that one as it's a little bit simpler. So the exact same process for Excel. The key part here is it doesn't need to be in any specific template or format for you to import it. The way we do that is we start off by saying, is this your header row? So it could be halfway down an Excel sheet, it could be below a cash flow, it could be anywhere. We say, are these your headers? Yes, they are. And now again, it's a matter of making sure those headers you're importing match the Forbury names for those. So these have all been matched perfectly, believe it or not. But if it ever does get something wrong or doesn't recognize any of these names, you can very simply just select, actually, no, that's the rates or that's the insurance that I'm wanting to import. If this is an extract from maybe a property management system, or you have a broker that sends you the same types of tenancy schedules in the same format every time, you can just select Save My Header Selections, and you can skip this whole process and import directly into the model. So I'll go confirm. I can move some tenants around if I like, if I want the ground floor at the top. I know some people like that, very specific about how things are structured in their model. But for now, we'll click Apply, and that will take all of that information from the workbook and throw it directly into the Forbury model. So from here, if I didn't faff about showing you the PDF as well, we could get a tenancy schedule imported into a Forbury model in about a minute or so. And that's got all of our tenant information, area, lease dates, the rent, the ERBs. We've also got some of the review dates in here, as well as some break dates too. So really simply, from reviews, I can say these are open market value reviews, quickly enter those. And then as a first cut of this, ideally, I'm running this transaction. I want to get to a no as soon as possible. I don't want this on my desk longer than it has to be. So I know we've been quoted about a 7% NIY on this as the asking price, and let's assume we can get the same on exit as well. I'm looking at this from the 1st of October, and I'm looking at a 60-month or a 5-year hold period. Now this is where the add-in comes in. This is where we click the Run Model, and that will process all of those inputs to the calculator and send them back to Excel. And there we have it. We've got our entry pricing information. We've got our exit pricing information, as well as all of our yields on entry and exit, all the things you'd expect, your net initial yield, equivalent yield, reversionary, and your triple net. And of course, most importantly, what sort of money are we going to be making if we do go and pull the trigger on this deal here? So we're looking at our IRRs, our multiples, returns and profits, all at various levels, at the asset level, at the pre-tax geared level, and even to the level of what return are our equity partners going to get as well, if we want to go to that detail. So right now, this is a good start. Maybe this sort of IRR is interesting to me. We're only using some default assumptions here. So to be clear, I go to my market leasing assumptions tab, which you might be familiar with from using Argus Enterprise. And here I've just got my default applied, a 10-year lease term, 6 months rent-free, and 3 months void. So this is what's happening to every tenant in this model right now. Now, me personally, I'm working for a fund. My team, we all look at industrial assets, for example. So I'm looking at this and I'm thinking, okay, let's go into a bit more detail. What I can do is navigate back to the add-in again and go to my house views button. Now this lets us apply sets of assumptions that we have pre-made earlier. Maybe we used them once and thought, actually, you know what? I'm going to use these sets of assumptions probably across all of my industrial assets that come across my desk. Alternatively, you can save these into groups of assumptions. Maybe the office team have their own sets of assumptions for their deals. But in this case, I'm going to apply my industrial northwest. So you can group them any way you like, by asset class, location, geography, doesn't matter. So I'm going to apply that. And that is going to populate my growth assumptions. So my CPI has been populated, as well as my construction inflation forecasts as well. And then also my growth forecasts for market rents, for my ERVs here too. So I've got a few different codes, got my optimistic, my conservative, my worst case, and I've also got what the brokers have been giving me lately. The second thing that's populated are my market leasing assumptions. So before we only had 3 of those, just the defaults. Now I've got my 5 that I usually use. So this provides a good basis to just get started, and I can go into more detail the further we get into this deal. So now with a little bit more detail, I can say, actually, for my ERV growth, I'm going to apply maybe my conservative to start with. So just like you usually would in Excel, you can use all the functions here. So you notice there, I just drag that down. I can copy and paste across cells the same way you would do. I can even put in formulas in any of these cells. So I can put in 1 times 4 in there to give me 4. So all of these input cells, you can use your usual Excel formulas in. So I've put in my ERV growth. Maybe I'll assume actually that this tenant here breaks. And we'll go back to the dashboard again, and we'll run model just to see how that comes out for our returns, pricing, and all our different yields as well. Nice. So it looks a little bit more sensible. This provides maybe a good basis for me to build off of. So what I'm going to do is come to my add-in once more, and this time use the scenario management function. So in Forbury, all of these models will start in a base. So we're currently in our base case. But I actually want to go and look at an upside scenario. So I'm going to go and create that. From here, I can now start to compare my base to my upside to any other scenarios that I want to create. What it's done here is saved where we were at in a point in time and saved every bit of those inputs that we can come back to later. So now you'll notice our current scenario is the upside. So maybe in this case, I'll assume we can get a bit of a better yield on exit. And maybe I'm thinking this is coming out at roughly about 4.5 million. So I'm just going to come in and override that price and say we're going to bid 4.5 million. You notice the yield's gone red. That's just saying, hey, we're going to use this price you've put in now instead of the target yield. Now, tenancy, I might want to tweak a few more things. Actually, my upside, I'm going to assume that we get that optimistic growth across all tenants. And I'm also going to come back to the end of this workbook about my market leasing assumptions and make some maybe generous assumptions about this. We'll assume they vacate, but it's a short vacancy. We'll assume these 3 tenants renew at the market rent. And we'll assume our vacant tenant also has a short vacancy period as well. I can go into more detail on these. If I want to build a very specific business plan, I can override any of those assumptions. So you're not stuck just using those codes that you've built. I can come in and be very specific with each tenant. I can then come in, maybe add a little bit of asset level CapEx if I like, and also add any other operating expenses, non-operating, if I want to go into that detail also. But for the time being, I'll run the engine again and we'll have a look at how that comes out in our upside scenario. Beautiful. Nearly 12.5, looking a little bit better. It's getting closer to what my MD is asking of me, as they usually do. From here, I can have a bit of a closer look what's happening on my review sheet. This is showing us an interactive graph of how our asset is performing. Right here, we've got our light blue. This is our contracted income as it drops off over time. And our dark blue, this is our renewal income, the future leases we're assuming that are coming in. And you can see they're tracking with the ERV until we exit. I can then go, actually, I want to see a bit more about what's happening with that vacant tenant. And you'll see here we have a short void period where we have to incur those void rates, service charges. And this next tenant has an ERV review halfway through their lease. If you come below, all of the cash flows update to just show you the cash flows for that specific tenant you selected. So as I flick through those, all the cash flows update straight away. Of course, you have your cash flow sheets for the whole asset. You've got your monthly, quarterly, and annual cash flows. And then, of course, out the back, a scenario sheet. So what we did was we created that upside and we had our base as well. So now we can start to compare all of these metrics side by side. Maybe I want to compare my asset IRR across these two. And of course, you can make as many scenarios as you want. So you're not stuck just comparing 2 or 3. You can have as many as you want. And at the bottom here, I can start to compare my running yields, my NOI across these different scenarios. So these are really great if you want to copy and paste into your maybe reporting, internal, external, your IC reports, things like that. And then just to round out the outputs on your chart sheet, you can sensitize any of your IRRs here. So I've got my asset IRR table and my geared IRR table. And from here, I can sensitize maybe the headline ERV or the refurbishment we're going to spend, the price, the exit yield, all information like that. And to do that, I can just click Run Sensitivities, and that'll run in the background. So what we've done is we've run a model, we've run a couple scenarios maybe, we're looking quite good. Maybe we want to send this to someone internally to maybe get their thoughts on it. But what they're not really interested in is every single output, input that's in the entire model. Maybe they want to see a nice summary. So this is where the power of us being in Excel really comes to shine. So while everything you see here, all of these blue sheets, gold sheets, and dark blue sheets, these are all standard sheets that all of our customers get. You have the ability to customize your model to your liking. So this involves creating custom sheets that are permanently attached to your model. So this will be available if you've got multiple users. All of your users will be able to see those sheets, and they'll roll forward through the different versions that we release. So in this example, I've got a few sheets pre-built here just to show you what is possible. So maybe I've got a small returns report here. So you'll see I've got it branded up. You can imagine these in your colors. I've got maybe a nice summary, the gross value attribution, IRR attribution, my running yields over time, how my debt and equity is changing. Or maybe I've got a nice transaction summary, a 3-pager that I want to send off. Maybe I'm a broker, my client, I've got a nice asset that's ready to go. I can give them the full pitch and a nice tidy 3-pager with maybe a little bit of commentary to go with it. Great. Reversions. Nice. We can get a lot more out of this. The very final thing I want to touch on is 2 more. One is a very quick way to apply debt to this model. So here, maybe I've got a nice and tidy base rate. I've got a cheap swap that I locked in a little while ago. So I've got a base rate of 3%, and I think we can get about 60% LTV. Maybe I'm being quite optimistic right now. But we'll get a margin of 2.5. We'll get a small arrangement fee as well. And so I can just scroll up and I can see exactly how that's impacting my returns. So I've got my asset returns without any gearing here, and I've got my returns after those that acquisition loan. So if there's any point you're looking through your model and you're thinking, okay, hang on, you've got 19 and 19 here. Why are there 2? What are these cells actually doing? So one, where we can, all of these cells have a formula in them. So you can follow that formula through and see exactly how it's being calculated. The second is you can click the small question mark in the add-in too. So this will give you a definition of any of these outputs and also any of the inputs as well. So in this case, I might be looking at what target approaches does Forbury offer, net initial, equivalent, triple net, target and IRR. And this definition here gives me all the information I need to understand what those options will do. So finally, this is all looking good. Maybe we even pulled the trigger on this deal. After the various iterations of the model, we settled on a nice base case that we need to move over to the asset management function. From here, I can go down to the export sheet function within the add-in again, and I can go and export that to an Argus Enterprise file. So I select which version. I want all the contractual information exported, and I'm just going to go export to Argus. And what that is going to do is send it off, produce an AVUX file, and with that file, as you see, popped up, Forbury Asset Export.avux. With that, I can then import that straight into my Argus Enterprise environment, and that will be available there with all the contractual information that we decided on within Forbury. Beautiful. Well, nice, quick, fast underwrite for you.
Amazing. Thanks, Ryan. That's a great demo, just showing how users can utilize the flexibility of Excel, but also the power of the cloud computing element in it. I think that's very important. So we have a final poll, which we wanted to ask really. Imagine using Forbury. So if you could reduce the time spent managing your models, what else would you use that time to do? Okay, so we thank you for your attendance. We hope you've enjoyed the webinar. So please don't hesitate to contact me, Ryan, or any of the team if you wish to discuss Forbury and how we can help your business. You can also email us on this email address here on the screen. Please note that you'll be able to re-watch this webinar on demand as well. And this will be sent to you all via email so that you can all access it at your will whenever required.